All right, let's just get right into it. I'm about to say something that, well, it might ruffle a few feathers, especially if you're one of those chart artists out there. So, brace yourselves.
And there it is. Today, we are going way beyond the lines on a screen. We're talking about a fundamentals-first approach to crypto. It's really about understanding how to profit from the chaos, the random news, the late-night tweets, instead of just getting completely swept away by it.
Welcome back to the channel, Finance People. If you are new here, a hearty welcome from the JoshLM Finance crew. I'll be your teacher today, so get your pen and pad out and let's break this down.
Okay, first things first, you have to understand that crypto is just a different kind of beast. This is not your uncle's stock market, and the old rules, let's just say they don't always apply here.
The crypto market, it really runs on narratives and news. I mean, think about it. Billions of dollars can shift in a matter of minutes because of an ETF rumor, some government headline, or, a single tweet from someone like Elon Musk. That's not some magic line on a chart breaking. That's a fundamental catalyst hitting a very, very emotional market.
This slide right here really shows the hierarchy of it all. See, fundamental analysis, that's the big dog. It tells you why something is moving and the general direction it's likely headed. And technical analysis? That's the assistant. It's a useful tool for sure, for helping with the when, the timing of your entry or exit, but it is definitely not in charge.
So if fundamentals are the real engine here, what are we actually looking for? What are the key questions we should really be asking ourselves?
These are the questions that actually matter. Is new money flowing in? The Bitcoin ETF approval is a perfect example of this. That wasn't some chart pattern playing out. That was a fundamental shift that opened the floodgates for billions in institutional capital. Are we in a hype cycle, or are we in a fear cycle? Are there big narratives forming around, say, AI coins or the Bitcoin halving? They're capturing everyone's imagination. That's the stuff that truly moves the needle.
So here's the bottom line. Charts are basically a rear-view mirror. They are great for showing you where you've been, but fundamentals, well, they're the map. They help you understand the terrain that's up ahead so you can prepare for what's next.
So, what about technical analysis, or TA? I mean, let's be real. A lot of beginners treat it like it's some kind of astrology with candles. You've seen those charts, right? 17 different lines, 4 different indicators, Fibonacci levels they probably pulled from their grandmother's birthday. It's just noise.
Now this slide gets to the real purpose of TA. It's a tool. It's for timing entries, for identifying potential exit zones, and for seeing if the market is, maybe a little overbought or oversold in the short term. But here's the key. It is not a crystal ball. If some major news drops, I promise you no indicator on Earth is going to save your trade.
Okay, so all of this brings me to my personal strategy. And look, I don't try to predict the market. Honestly, I think that's a fool's game. Instead, I prepare. I prepare for the one thing that is absolutely guaranteed in crypto: chaos.
And I do this with something called grid bot trading. Now, these bots are fantastic because they really don't care if the price goes up or down. They're designed to profit from the movement itself, that constant back-and-forth volatility that drives most manual traders absolutely crazy.
And it's actually shockingly simple in practice. You just set a price range. Let's say for Bitcoin, maybe between $40,000 and $50,000. And as the price dips inside that range, the bot automatically buys a small amount. When the price rises again, it sells that same amount for a small profit. That profit gets locked in, and the bot just repeats this process over and over again, 24/7. It's kind of like having a little money-making machine working for you in the background, just capitalizing on all the market noise.
So while everyone else is glued to their screens, getting all emotional, panic selling, or FOMOing in, my bots are just calmly executing the plan. When people complain that the market is too volatile, I'm just sitting here thinking, good, feed the bots. Now that's my style, but hey, it's not for everyone. So let's just quickly break down a few of the main trading styles out there to help you figure out where you might fit in.
Okay, so first you've got hodling, which is great for long-term believers, people who can stomach seeing their portfolio drop by 50% without even breaking a sweat. Then there's swing trading, for those trying to catch those medium-term moves, but that requires a huge amount of emotional control. And finally, there's my approach, bot trading, which is pretty much perfect for systematic thinkers who'd rather build a machine than stare at charts all day. Though it does require careful setup and risk management. And hey, finding your style is key. If this explainer is helping you do that, please do me a favor and hit that like and subscribe button. Seriously, we're trying to get to 1,000 subscribers, and every single one helps the channel grow. Thanks a lot.
All right, let's wrap this all up with a really simple analogy that I hope will stick with you.
I want you to think about trading crypto like you're driving a car. It really helps put everything into perspective.
Technical analysis? That's your speedometer. It's useful, sure. It tells you how fast you're going right at this moment, but it tells you absolutely nothing about where the road is actually headed.
Now, fundamental analysis, on the other hand, that's your map. And it's the road signs. It's the thing that warns you about the sharp turn up ahead, or the dead end, or that massive traffic jam that's coming.
So, which one do you think is more important for not crashing? I mean, you need both, of course. But ignoring the map and only staring at your speedometer, well, that's a recipe for disaster.
And of course, the obligatory disclaimer, none of this is financial advice. I'm just sharing my perspective for educational purposes only. Please always do your own research and manage your risk.
Thanks for sticking with me till the end. It shows how important financial literacy is to you. Clearly you got value from this. So do me a favor and share it with someone like you, and I'll see you in the next video. Take care.